this is going to be a different kind of panel because this panel is actually going to be a discussion among, we're going to attempt to make this a discussion because we have some interesting,
How do you want to distribute this?
you want me to sit someplace else?
No, I think you're sitting in the right spot.
Oh, I'm the right. Anyway, can I ask you, I think some of you probably had some of that turkey sandwich. And that means that we're fighting against the chemicals and the enzymes in the turkey. That's just like wanting to try to put you all to sleep. So a couple of you just do it. Just like come up. Thank you so much. Thank you so much. Maybe a couple more. Maybe can I get 5 people? If 5 of you.
Should give a prize.
Come to the front or move to the front. Oh, Jeremy, excellent. These are people who know me are moving to the front. I think there might be a prize.
Are you giving away a pin?
Whoever doesn't move up gets to spend a week with
Yes.
me.
Maybe you should.
Sure, I was going to sit in the middle, but I'm happy to. Okay, thanks a lot, guys.
No, if you go there, so you
Yeah,
see
you should be on an extreme.
Okay, they want me on the extreme. They don't realize that I'm already on the extreme. So anyway, I want to thank you all. Some of you who moved up, thank you so much. This is going to be just a little bit different, as you can tell, because we all have something to say, but we know you all have something to say too. And so the idea is that I'm going to be asking some questions of our panelists, but then, if you have a question or you have a thought, raise your hand and I'll recognize you. I may not recognize you right away, but really soon. But the other thing is, we're all going to have a chance for this to be interactive so that, we're going to have questions, we're going to have answers. If people go too long, I might jump in. That happens. It's not personal. It's not personal. So, so this is the DeFi panel. I'm Andrea Tiniano. I'm a Delaware lawyer. I'm working with GBBC on this group, and I've been in the space for quite a number of years as a legal advisor and a business advisor. But now I'm going to ask the panelists to please tell us just a little bit about themselves. They're going to keep their bios short because you can read all about them in multiple sources, and then we're going to jump right in. Thank you.
Jay Gdansky, founder and CEO of Evertas. We are the first crypto asset and blockchain infrastructure insurance company and Lloyd's cover holder, but read more about us on our website.
I'm Greg Medcraft. I'm on the board of GBBC Digital Finance and also on the board of a digital finance research centre. Prior to this, I was the director of the OECD, and prior to that, I was the chairman of the Australian Securities Commission and IOSCO, and then prior to that, I was an investment banker, Wall Street, 30 years in banking.
I'm Daniel. I used to head the protocols team at Stakefish, a validator service provider, and then led special projects at F2 Pool, mining pool.
So we have 3 different people in 3 different areas, very different parts of the industry. And even though we might all know what DeFi is, everybody sort of has an idea, they think they know what it is. I'm interested in the panelists, if you could each tell us what your take is. What does DeFi, what does that mean to you? And let's just start with you, Jay.
I think a lot of times, it starts for decentralized finance, right? But I think people get a little too fixated on the finance piece. I think of DeFi as representing decentralized applications and tooling, of which obviously, for various reasons, finance is a large part of that, including some of the economic incentive structures. But I do think it's a little bit, there's a little bit of a myopic discussion because it tends to solely focus on the financial parts. And there are many applications, ID being one of them, trade finance, provenance of goods, et cetera, just kind of off the top of my head, where it is far broader than that.
Well, basically, what I see is DeFi is basically it's a financial infrastructure, an alternative financial infrastructure that is built on a blockchain that is permissionless, that is public, and that is programmable via smart contracts. And the thing that really distinguishes it from other blockchains is that, firstly, it's non-custodial, which makes it very attractive. Secondly, is that it's self-governing. And thirdly, the most exciting part of it is the composability and interoperability of it that really does allow the building of even more innovation, alternative financial infrastructure.
I would just say it's unencumbered access to censorship-resistant financial platform.
Are we talking about the ideal here, or are we talking about reality, what's out there? What do you think? You know, because we're talking about decentralized, we're talking about the unencumbered, and what does anyone have any take on that?
Maybe the reality is that we'll have certain countries that determine whether or not they are actually decentralized. But
Can
like
you
the idea,
elaborate on that? What do you mean?
the ideal is that it'd be a completely neutral protocol that that doesn't have, let's say, like a subjective say on who can use it or not. Yeah, but maybe we'll keep it
I
at
sense
that.
some subtext there.
Maybe Greg, you have strong ideas about what kind of people can access like a neutral protocol, or maybe it's you can liken it to
I think
like
you've got to distinguish. I mean, I think decentralized finance per se is a good thing, but then if you're, you know, like a DAO is a good thing for it's a mutual, right? But it's the issue of when you move into dealing with financial services, depending on the type of financial service, the level of assurance the community needs is greater, and the levels of security then tend to be greater. So it sort of is a function of what is the nature of the promise or protection that you're providing the service. The thing I'm very excited by DeFi, more so than just centralized blockchain, because its ability in terms of speed and, you know, reducing costs and friction, and it's got so many great advantages where I'm sort of really strong believer in, hey, let's try and work out how we can make this truly happen.
Yeah,
that's why, you know, whether it's in asset, and why are all the banks interested in it? Because they're scared like hell, right? Whether it's asset management, insurance, borrowing and lending, decentralized stock exchanges. I mean, basically, it potentially can attack the whole financial system, right? But for good reason, right?
Absolutely.
So
And
I'm a fan, but it does mean, you know, you identify the risks and the opportunities, and then how do you solve the problem, right? So that's what we're doing and trying to do at GDF, is trying to develop standards that actually say, right, okay, yeah, as we used to say at the bank, there's no problems, there's only solutions.
so I want to pick up on something you said, which had to do with decentralization. And what is decentralization? How much decentralization? Are you going to have absolute decentralization? And it sounded to me like you're saying, well, when you're dealing with financial assets, you better have not only a lot of decentralization, but you better have some really tremendous security built in. And that's sort of where the standards go to.
Yeah, I mean, but you know, if you're going to build a business, you want to have customers to have trust and confidence in you, right? So I mean, you don't necessarily need a regulator to say you don't want to be hacked. Every standard says, well, one of our standards is it's got to have good, strong security around it, right?
So I'd like to jump now to to my friend Jay here, because you want to have these secure protocols on a decentralized system, and I suspect, given your expertise in the insurance industry, you probably have something to say about that, and maybe we can learn something from insurers like yourself.
Well, as everyone who knows me knows, I always have something to say about pretty much everything. I think that someone said, "Oh, DeFi, DEFY, we should put Jay on this," but there we go. This is doing better than my actuary joke, which was at the last panel I was at with you. It's the only activity we got in that room. So first off, I mean, I think on the issue of decentralization, we should recognize the fact, and there's a great report by Trail of Bits. The infrastructure is not particularly decentralized, right? I think some ridiculous percentage of assets of decentralized infrastructure is being run off of AWS.
I just want to stop for a second. Does everybody understand? Has everyone? What he's saying is really important. By show of hands, is that something that's known to everybody about this AWS? Some people know. Can you just elaborate just a little bit, because I really want the room to really get what you're talking about here.
This is one area where the Bitcoin maximalists have a really good point, and God, it hurts to say. Most infrastructure is being run off of Amazon Web Service or some other cloud provider, but mostly Amazon Web Service, or so Microsoft Azure, Google Cloud Products, et cetera. And so, if someone just says to Amazon, hey, shut down off all those nodes, you lose a lot of your processing power. It also takes this is a very interesting report that they put out. So it's, I think, 26 pages. They also had a podcast on it if you prefer that format where they discuss it. It takes far less financial resources than people think to do 51% attacks and have some kind of softer manipulation of these things. So when we talk about decentralization, one should try to think about how truly decentralized all of these things are. I think a lot of them have architectures that enable them to be truly decentralized, but when you actually look at the infrastructure, that's not the case. Just not to go off on a kind of a tangent.
No, but I thought that was important. But you can go back.
From a standards and security perspective, we're fairly unique as a company in that we developed underwriting and policy forms designed specifically for this industry. We're not repurposing other kind of processes or other policy forms. And so we really have to think about, well, how do you, for potentially a very diverse, fast-changing group of risks, how do you do underwriting and manage those risks? And obviously standards is going to be a large part of that. I'll be frank that I think, if you look 2 or 3 years, you've seen massive improvement within the industry around, DeFi in particular, where you had these massive hacks and people running away with money, and now there are these massive hacks, the funds get frozen, someone says, oh no, I'm just a white hacker, pay me a bug bounty, they get a relatively small percentage of the assets that they found, and the assets tend to be returned, which is really actually a very substantial improvement, along with greater tooling and kind of infrastructure support that. So I think we have made a lot of progress. I think there's a lot of progress that is yet to be made. And I think that ultimately, from a very selfish interest, and I'm always a little wary of market arguments because I see, the theoretical kind of libertarian talking points don't always play out, but there is definitely a vested interest for us as an industry to make sure that people don't have their money stolen from them, their assets stolen from them, because otherwise, as Greg said, no one's going to use them.
Yeah, it's not going to work out very well. I want to jump to Daniel, please.
Yeah, I could.
Sorry.
I don't know if there's no.
I think you're on the other one.
Oh, I can basically reiterate what he was saying. Stakefish is like the largest non-custodial validator for Ethereum, and we're also the same on Cosmos, and it's actually, I would say that decentralization's one of the biggest points for decentralization is the type of resilience you would get. Let's say, for example, if the government decides to tell Amazon to shut down all the validators who are running their infrastructure on it. One other thing I think is when you do want truly sort of unencumbered access to the system that you have across the world, you need to be able to be resilient also to sort of doxed or publicly known entities, specifically in the proof of stake ecosystem that, coincidentally, Ethereum is moving to tomorrow, all of the validators that are representing these large nodes, and these validators are basically service providers that run these nodes for other people, we're all doxed. There's a VAT, and so I'm not saying you regulators do this, or maybe you do need to, but it's very easy to basically, you just go down a list on a leaderboard and you can know who each validator is, and there's people who publicly represent them. You can literally shut down, you could just say, oh, Daniel, you live in America, you want to stop doing this, or we're going to send you to jail, or going to, then I can't do anything. I'm glad to live in America and I enjoy it a lot, but that's the type of resiliency that I think is afforded by that type of decentralization. And a lot of validators, I lead a working group called the Validator Commons, and we were all sort of, when the OFAC sanctions came down on Tornado Cash, that's an application level sort of censorship, let's say, attack. But then,
Wait, are you saying that the OFAC listing of Tornado Cash was an attack by our own government? Is that kind of?
Okay, maybe not attack, but
I know. I appreciate that.
Let's say from the crypto maxi side, but then it's trivial. It's maybe it's a slippery slope where you just go to, okay, that opens a door to going and talking to infrastructure service provider where you can actually stop certain transactions from passing through at the block building level. There's a very popular decentralized exchange in the Cosmos ecosystem called Osmosis, and there literally is a file called blocked.go that has been sort of compliant to those sort of lists. And then that was a big argument in the validator community that was deciding to kind of vote in whether or not we implement that block.go file that would at default not even allow transactions to pass through when people are doing it, which is great, right? Because if the United States government decides that these sets of addresses they don't want people to interact with, but then there's also like the kind of neutrality component that other people in the world that don't necessarily have the same opinions of the United States government are encumbered from accessing this supposedly neutral protocol, which then comes into the question of like, then who, like, are these blockchains actually truly decentralized or neutral versus what you having more like permission systems. And I have worked with permission blockchains many years ago, and it all just turns into sort of like these distributed databases. Yeah, like we look at TradeLend. I mean, like that Marvin Early literally came and gave a talk when I was in grad school, and we had him draw it out, and it was a distributed database. And then he was like, yeah, like this is what ended up happening because one, Hyperledger Fabric was quite difficult to work with, but then when you don't have like some of those guarantees that you can get from those properties of decentralization and specifically censorship resistance, you just like.
So Daniel, I'm going to ask you a question because what you're saying is absolutely fascinating to me, and I'm sure to everyone here. Is there an end game here? Because obviously we know that the U.S. government has tools to stop transactions that they believe to be dangerous to this country. OFAC, and that's why OFAC they did it. They're being challenged, but they did it. So is there a path forward here that you can, given your experience, that, what do you think?
The extreme end is like the crypto maxis, like, strap nodes onto their back and live underground and continue. I mean, like,
but you, as you said, we like living in America. So for those of us who like living in America, is there a way to? What do you think?
Maybe it's continued conversations with regulators. I think like there's definitely like if you ask anyone, like, yeah, of course you don't want terrorists using this. But
sorry, it's why often, a lot of innovators get it all wrong because they often say, well, we do, often they say, look, we're happy to, we all want to be regulated, but the issue is the sort of regulation that you're offering is not what we really want.
Right.
And
we want regulation, just not that regulation.
As a regulator for a decade, I always find these discussions very amusing, but also having, the work that we're doing at GBBC Digital Finance is we're talking about a co-reg model where we're saying, hey, basically you don't need to wait for the government if you have industry standards that actually deal with what the mandate of the relevant regulators are, like OFAC, right? OFAC's concerned about, national security.
Of course.
So, okay, well, we shouldn't do something that's going to really annoy OFAC, right, and put us in national, because not many people have got sympathy that if you're causing a breach of national security, right?
Nobody wants that.
No, they're not. Of course they're not. Right? Like it's the American way of life. But I think a lot of the time you can be forward-leaning if you're realistic about setting market standards. Market standards, not that you develop in isolation with the regulators, but in collaboration with the regulators, so that basically, hey, look, what's on your mind? What is really concerning it, whether it's an anti-money laundering regulator?
I'm curious about whether Daniel thinks his validator group would be willing to sit down with the regulators and have a really comprehensive conversation, because my guess is they want to know. They may not give you what you want, but maybe would they do that? Would they sit down with the regulators?
You're talking about like self-regulation or like FINRA style kind of stuff. Yeah.
Or at least getting the conversation started, right? Like,
I think it makes a lot of sense. But
I'm not
I
putting you
think
on the spot.
I think governments have a bigger upper hand, right? Like there literally are people who are there literally are people who are trying to build wind turbines that float in international waters and strap nodes to them, and then people are like, oh, it's not going to work because like we have like, oh, boat comes out and knocks it out. There's a satellite in space that Blockstream sent out, right? But the cryptocurrency.
Have people like you who actually want to live and work in the U.S. and want to be.
Of course, yeah. I think we'll bend the knee, right?
Okay, what were you going to say?
So I'll defend Daniel's use of the word attack, because I think from a security standpoint, when you look at a system, you're like, anyone who's meddling with it is an attacker. It's not necessarily doesn't have quite the the connotation that most of the lay community would associate with, but. A couple points. I mean, I think there's generally a much larger discussion that has to happen, particularly in the Western world, around, you know, we've kind of tried to play kind of both sides of the privacy and security spectrum. And
What do you mean by that?
so, like, I don't know, 40 years ago, right? Who has the ability to crack strong encryption and do really, like, you know, very sophisticated attacks? Well, there's like 5 countries, and you have satellites. You can say, okay, you know, the Russians are building a supercomputer. Okay, that can house this many things, and therefore this encryption is no longer secure. And I think the idea that for a long time it's like, well, we can have security, but privacy, but security, but we don't need privacy. That's completely false. I think. I mean, again, this is kind of way off topic, where you're thinking about the misuse of private data and personal data. I do not see how you can have a secure or a future without privacy, and privacy is fundamentally at odds with the kind of pervasive financial surveillance and actual surveillance that's being, you know, being built out. And so I think at some point, you know, we have to make a decision. Do we want to have freedom? And that freedom does mean that you're going to have bad actors who are going to be slipping through the cracks, or not. And that's like a much bigger.
But we've seen this. But we've seen this issue. Remember with the iPhone, and it was encrypted, and the FBI or somebody wanted to get into the iPhone, and they said no, we're not doing it. I mean, like, we haven't seen this.
We end up with regulation is because
and what's that?
When you have bad actors do bad stuff, and the industry hasn't self-regulated itself well enough, you end up having regulators, the social license moves. The people call on the government's going, what
But that's why we have
doing?
the 14th Amendment, right?
Yeah.
You know, I mean, this is an issue we've been struggling with since the birth of our nation. Like, how much power does the government have against what kind of rights we have?
The point I'm making is you can actually manage it. There are industries that are very well self-regulated because they're forward-looking and they've got good market standards. And they're actually well self-regulated, and they go, well, actually, this doesn't happen here. Therefore, the regulators say, well, it's nothing to see, right?
So, I mean, I think
sometimes it's a failure.
I understand what you're saying about that.
Look, I mean, trust me, I want nothing more than to have nice standards, right?
Yeah.
And, you know, clear regulations. I'm just making a point that's somewhat separate from this, which is that the idea, right, which is like, well, things are going to be, you know, generally safe, and if a wise sworn judge who, you know, swears an oath to the Lord Almighty says that, you know, you did something wrong, we can go break through that. The idea that you're going to have selective security doesn't work.
Oh, yeah, agree.
And so this is the problem. This is the iPhone example. Yes, you're right. We couldn't get into the iPhone of the San Bernardino attacker, but almost all of these scenarios that people come up with are either ridiculous scenarios that as soon as you start picking them apart, make no sense. There's a ticking time bomb in Grand Central Station. Well, guess what? How do you know that? You have information. You have a lot of information and a lot of tools that don't require you to break encryption, okay? The flip side of this is that when you start backdooring these things, you basically just create honeypots, and the even sophisticated, you know, security actors, let alone governments, have shown time and time again that they're unable to keep that information secure. Every single person with a security clearance going back decades has their fingerprints, their psychiatrists, their financial issues sitting in a bank in China because the OPM couldn't keep their data straight. The CIA could not keep its most valuable cyber weapons secure. So, like, if we think that somehow we're going to trust these people with some sort of selective backdoor, that's insane. And eventually, the people that run this country need to realize, and most of the
tell us how you really feel. Don't.
Oh no, I'm holding. Trust me, I'm holding back. Like, people have to actually figure out that ultimately, these things that allow them to do their KYC and their you know, financial surveillance and all this other stuff is ultimately going to bite them in the butt, because you're actually empowering your actors, your malicious actors who do not have your best interest at heart.
We're going to jump over to Dan, and Fourth Amendment, not 14th Amendment, search and seizures.
I just want to reiterate what he said. Like, you can't have the type of self-sovereignty without that type of privacy, right? If someone's always watching you, literally have an open and transparent bank account that they've connected with you, you're not able to move that money if you want. And right, maybe I think it was like the late 80s or 90s, there was literally like the government tried to put backdoors in encryption. It was like they had something called the Clipper chip. Yeah, and it was like, but maybe there's like stuff you could do with zero knowledge proofs and have like attestations that are only selectively revealed. Who knows? But I think that if you do sort of limit the type of innovation that Greg was talking about, which we don't want, right? It's then you can't have that competition on the world stage. It's funny because I don't know if everyone saw, like, Andreessen Horowitz had put out this sort of team called American Dynamism, which was literally trying to like, they're pointing a finger at, let's say, the United States having like falling back in terms of like the technological innovation that a lot of the world is kind of progressing on rapidly. And I think crypto and blockchain is definitely one of them that they need to like, the regulators need to be open to playing ball and thinking that, oh, we know best and we're just gonna like, steamroll everyone and we don't even have a chance to like, to play in maybe sandboxes, right? Like, I
Well,
think.
sandbox is a good idea, but I think with something like DeFi, when it was first raised with me, they go, oh, it's just going to ban it, right?
What was that? I didn't hear what you said.
When it was raised with me originally, they're going, oh, this is really dangerous, anti-money laundering, right? They can just basically all anonymous and,
Well, not anonymous, right? It's
yeah,
not-
well, they are anonymous, right? And I said, well, let's break this down, right? Well, I mean, there's ways of solving that problem, right? You've got the Concordium blockchain, which actually has got remarkable anonymity, which only the regulators, and you've got to have a court order to get access to the. So if you've really got a concern about the actor that actually is transferring money, and you've got a good reason to do so, that particular party, you can solve the problem, right? It's not. But between us, it's still anonymous, right? So, I mean, without having a backdoor. So, again, there are solutions that you've just got to think about the problem. What's your problem? And how do you,
What are the risks? What are the risks and how?
Like this example of, say, with the DAOs, right? And they go, oh, DAO, it's, well, no. At the end of the day, you can have a DAO with a set of rules, algorithms, whatever, but there probably still needs to be a responsible party if something goes wrong.
Maybe. What do you think? DAOs, decentralized organizations, autonomous organizations. Greg is saying that. Yes, please. Stand up. Tell us who you are. Is there a mic?
His name's
Yes,
Mike.
there is a mic.
I'll keep on making that joke.
Here we go. Here you go. Tell us who you are.
Hello, my name is Connor Riley. I'm with the Cato Institute doing crypto policy stuff. With DAOs, it's like interesting because they're branded as decentralized, but like a lot of the voting is done by like one or two whales to hold a majority of the tokens, and then they dictate the outcomes.
So it sounds like you're in sort of agreement with Greg here. Anybody else have a thought about DAOs and who's really holding the cards? Who's making the? I see someone shaking her head, but.
Sorry,
Oh, we got someone right here.
I think the point for DAOs is more to protect the people who are the governance token holders who could end up, if it's seen as an unincorporated joint venture or partnership, with the legal liability.
Oh.
So what I'm talking about is how do we make this new DeFi system work without the unexpected, basically passing liability, tax liability, or other things.
To the unsuspecting token
No,
holder.
but sorry, this is about how you make it actually robust. And you say, right, well, it is a separate legal entity. You can't go after the people who are the equity holders. But there is a responsible party that actually they can deal with. So that's what I'm talking about.
So basically, kind of like normal corporate structuring, where these are the officers. If I'm a shareholder and I do,
Except that with a DAO, you don't have a board of directors, right? You've just got the algorithm. So you're dealing directly with the membership, but you don't want to deal with the whole membership if it's a legal case, right? But you still need to appoint a legal representative.
This gentleman stood up to ask a question.
and walked forward.
What do you have to say?
There have also been some interesting examples of meta governance in DAOs where other DAOs or protocols that own tokens for sort of almost like an ETF token or LP tokens that leverage those to get an outsized say in another DAO. So there's some unintended.
You've got the fluidity of the tokens, right?
Yes, and sometimes there've been instances of those being manipulated to try to get certain outcomes in another DAO that would benefit another protocol or.
So we don't have a lot of fiduciary obligations then among the token holders and
DAOs
the
all the way down.
participants. DAOs all the way down.
But I do think the DAO is more about, you've got to solve the legal issue of DAOs, because I think they're critical to the evolution of DeFi. And you do have to have a separate legal entity. And that's something, as you said, one that Delaware is looking at this. We know that others. Australia is, at the moment, we are working on a change to the corporate law that will allow, as a major jurisdiction, a DAO. But it will probably most likely still require there's a responsible person with resources if something goes wrong, right? that you can do it, but it means that then token holders don't end up with the unlimited liability, right? So I mean, that's where I think it's another example where you try to solve the problem of DeFi. Yeah.
Anybody else have any comments before we move forward? Next. Yes.
I've just got one. If you listened at all to Chair last week, he identified exactly that investors should have the same go after. Resonate with those of us lawyers at law firms. Essentially, who do you engage with when you're signing an engagement letter? And who is the entity after whom you are looking at the end of the day to get paid? And it was quite a sort of pointed and appropriate statement, I think, for the audience. And someone in that position, I mean, I represent DAOs and I deal with conflict among DAO members when they fall out, and there are multi-sig wallets, and there is a dispute over whether is this a partnership or what was this intended to be, and it's a tricky issue.
I think that's where the discussion is going in other countries. It's actually heading towards the idea of responsible entity takes on that, that area.
I'll kind of pile on, and this is kind of another example where probably the industry is going to be able to run ahead of where regulators are in terms of how this starts to shape up.
Well, actually, the industry could come up with a market standard
and
actually
should.
say, we think there should be a responsible entity, right? Hey, you don't need to wait for the government to do it for you, right?
Yeah,
you can shape it.
So it sounds like this group doesn't think necessarily that the regulators or the legislators ought to be coming up with the legislation or the regulations. It's that the people in the room and on the panel who are intricately involved with the different parts of whether they're miners or validators, they need to be putting their heads together and start thinking about what are those standards, what is, you want to have a very narrowly tailored, I'm a lawyer, so we talk about narrowly tailored responses to the risks, right? Yeah. Think about what those risks are and how could they be mitigated, and what is the role, and not just what's the role of government, how could technology, like what we're talking about, the zero knowledge proofs, with respect to identity and other aspects. Even I think it's even custody could be potentially right.
But also things like we talked about security, right? Well, okay, yeah, sure. Let's agree on a standard on basically the testing and the auditing and monitoring of the algorithms, right? As an industry standard, right? Oh yeah, that one, yeah, sure, I dealt with that. DAO, here's the way, we dealt with that. Okay, what's your other issue? Oh, specific identification. Okay, we actually are using this particular blockchain. And if you've got a problem, anti-money launderer, yeah, this is our standard. So I mean, if you're a good industry, and then even if the government wants to come in, you go, well, hold on, why do you need to come and regulate?
So yeah,
we're here, we're doing it. What's your problem, right? That's where you should be. Yeah.
So what were you going to say, Jay?
Yeah, so I mean, this is the role that the insurance industry has kind of played historically. So I mean, I can get on my high horse and give you the history of the fact that building codes, fire safety, consumer safety is all from.
But is the industry now working on it, or do you need to?
Well, we are the industry, and yes, we are.
You are your company, you, Jay.
Yeah,
and this is where you say, actually, I have some suggestions.
Yeah, so I mean, this is something we're actively working on. I think, part of the problem is that I think, ambiguous regulation is worse than no regulation, and regulators are often too slow and, quite frankly, too disconnected from what's going on to be effective. And this is kind of recognized, right? Like the SEC, I think in 2011, 2012, actually required public companies to have cyber insurance. They said, well, wait a minute, we're not going to do a good job of keeping track of this. Of course, the cyber insurers didn't either, although that's changed pretty rapidly in the last 2 years. We want to have some third party that has some actual economic skin in the game. And I think that you're starting to see this where we're seeing the jurisdictions that require bonds for money transmitters starting to require those bonds to cover crypto. I thought that was going to be probably 2 years from now. We've over the last several months, a number of them have come forth and said, nope, when you get a Fidelity bond, it has to cover crypto. I do believe, I think the SEC trying to regulate some of the exchanges will require insurance. And I think in general, the industry itself, I'll put on my pro-regulator hat for a second, hasn't been doing itself any favors.
Yeah.
And we've had a number of conversations with people who say, well, I just want insurance basically that costs nothing. I don't care. I just want to say I have an insurance policy. You're like, well, okay, that's great. And there are plenty of people out there who do that. And that's not going to develop the sort of kind of robust
kind of infrastructure.
Yes,
I want to go back to something, Daniel. In an earlier conversation, I think you had taken a very extreme position, although interesting, about caveat emptor, let the buyer beware. And to some extent, that's somewhat of an ethos in the crypto industry, where you have people can look at the protocol, they can decide if they want to send their value to a smart contract. So is all this talk about regulation and insurance, is that really necessary? Or do we need to find some middle ground?
I think insurance is like a good way of self-regulating. I think also if you do, let's say, leave it up to the community to decide, there used to be this sort of mantra that code is law that I think everyone kind of gave up really quickly. I used to be a code is law maxi. Like I used to be an Ethereum classic maximalist, and then quickly had to change my tune. But here's a fun story. So there was if you wanted to have sort of like this self-regulation and buyer beware, or like whatever terms and conditions that people maybe passively or signed on to, there is still possibilities to like roll back the clock. We all like to think that these chains are actually immutable, but when you get validators or infrastructure service providers that can, let's say, collude on behalf of the community, then you can do it. There was a Japanese maybe crime syndicate that had accidentally or inadvertently received like $128 million worth of an airdrop when a new chain came on. The chain was called Juno, and then the community literally went and then argued on behalf of their own sort of bags, and then said, we're literally going to take this guy's money out from his wallet and then burn it. And that's what they did, right? So that self-sovereignty and that type of immutability was violated, but does it really matter if, right, do the laws of the chain or the properties or principles of a certain cryptocurrency matter if no one uses it? Like if you thought of like Juno or those cryptocurrencies or blockchains as like these villages, and even though like certain like laws are like, let's say 1 + 1 = 2 and the sky is blue, but the entire village decided to say that, we're going to agree and to live under the reality that the sky is red, and they go all migrate to that village that believes it. That other village that has like the universal truths of whatever math or nature is, it's going to not exist anymore. So there still is the ability to have that type of sort of self-regulation because the community has such an outsized say, which is precisely sort of like they were valuing corruption resistance over self-sovereignty and immutability. And maybe there are gives and takes there, but it's still possible. You still have that type of self-regulation. And right, again, it's like, it's experimenting. I would say some of these governance ecosystems in these chains, and a lot of proof of stake has different types of governance. We are sometimes recreating the wheel, and we're looking at, it's pretty bad if like we have mob rule, but then it's also pretty bad if we have like tyranny of the devs. And then you're looking at something that looks remarkably similar to like an electoral college vote and a popular vote, which is like, we had that exist. But then, right, maybe that's where there's that disconnect between, right, engaging with people who actually know this. Like the company I used to be at, like we literally gave out grants like law schools and then asked them like, hey, you like hit the books. This is like the technology platform that we're working with. And then now we're implementing this type of governance that allows for the community to have a voice and be that check and balance against sort of a centralized authority. And we have much more liquidity in terms of who we do delegate to be those authorities versus having to wait 4 or 6 years to do so. But I think it's all possible because you have like the efficiency from a global level to have that
Let me ask
type.
a question to the group. Given the speed with which regulations are being enacted in different parts of the world, right? Where is this all going? Where is this, and how will we in the U.S., will you think the U.S. will play ball with the other jurisdictions? Will set out?
Yeah, it will. I mean, basically,
Tell us.
basically, the approach to regulation, what we're seeing is functional equivalence, because the SEC said it's a security, if you weren't listening, it's a security. It's generally managed investment scheme.
For the time being.
Well, no, they've been
Well,
saying it for 5 years.
they've been
but
saying it,
nobody's
but-
been listening, actually. Jay Clayton said it 5 years ago. I mean, I agreed with Jay Clayton 5 years ago as a formula regulator. It's like, of course it's an investment scheme. Everyone in the industry was going, oh, no, it's something special. It's like, no. Anyway,
Well, I think some people in the room, I'm just saying, even though
so,
that's what's
but
being
back
said.
to answering your question.
Yes.
Once you have basically functional equivalents, and you go whether it's, once you have functional equivalents, you say it's a managed investment scheme, and therefore intermediaries who are in that chain, then basically they get regulated. And all, in terms of algorithms, you already got experience in terms of functional regulation, because we basically regulate high frequency trading, which is algorithms, or robo financial advice, which is algorithms. So basically it doesn't take much to connect the dots. But basically then, if you look at what's happened with MiCA, big one in Europe, MiCA and MiFID, basically even Gensler said, we may have to rethink the disclosure
regime.
the disclosure regime, which he's quite right. From my old area of securitization, they had to develop different disclosure for ABS, right? So, and what the Europeans have done with MiCA, within MiCA, they've actually got a tailored disclosure regime. So getting regulatory equivalence, I don't think is going to be that difficult once you get the situation clarified here, and it seems to be now coming to security tokens. So I'm actually quite sort of optimistic on that. But then it's about regulatory equivalence. Then it's about getting.
But can I ask you a question just to follow up? In the US, a lot of these tokens and what Gary Gensler has articulated relies on the Howey test, but Europe doesn't have the Howey test, and that's not.
Sorry, Europe has the managed investment scheme, and MiFID, it's identical.
It's identical?
Yeah, it's a managed investment scheme. Australia has a managed investment scheme. It's a collective, and if basically you have something where you have a common enterprise that actually is going to make money and increase in value, that is a managed investment. It includes, in fact, in my country, it includes people who initially, it can cover people who own timeshares, right? Because if they increase in value, includes horse racing syndicates. They get exempted, right? They go, well, that's, we're not trying to do that. It's a scheme that people come together with the purpose of making money. And if effectively you've got a coin and you're marketing it to people, and saying, well, actually, you're going to make a lot of money out of this, you can't go back and say, well, actually, we didn't really mean that. We meant something else. Come on.
You only say that when you lose money.
The problem for a regulator is when people lose money, they go, why weren't you regulating it?
Well, so this is actually, I'm not a regulator and I'm not a lawyer, nor do I play one on TV, and we should all thank God for that because I'm a terrible actor. But, I think that, first off, the US, there's always these wild cards, right? Like you're seeing the regulatory regime and the administrative state not only politically under attack, but legally under attack from the Supreme Court. And I think, who knows? And then we have this kind of weird bicameral system. I think, the idea is at the end of the day, as much as sympathetic as I am to the kind of the Wild West, like, hey, buyer beware ethos, I'm a sophisticated person, I have a PhD in a technical field, and I still get really pissed off when I'm on a forum and someone says, oh, you should just read the code. I'm like, no, I'm not going to read the code of, every single thing that I use, because that's impossible. And by the way, so I think there is a reason why regulations exist. There's a reason why standards exist. And I think, if you can get, and to your point, it's around having safety, right? So if that's done through self-regulation or through responsible industry or through regulation or through the insurance industry, shameless plug. Sorry, Sandra looks like she wanted to raise her hand. Oh.
Oh, we do have someone. I'm sorry, I missed you. I apologize, please. Yes,
can.
speak up. Okay, thanks, Daniel.
For the live stream, can you?
Oh, sorry. Yeah. So the question is that, in securities here in the US, once an investment is restricted to accredited investors, then it becomes more of a caveat emptor type of scenario. So could it be that part of the problem here is that the smallest retail investor has been involved in Bitcoin and tokens, and maybe the way to look at it is as a sophisticated investment?
Well, look, I think there's like a much larger discussion to have about the fact that companies are increasingly not going public, right? And so they're staying in private markets. And I think there is this really pent up demand for people who don't necessarily have the best access to the financial system or have their financial risk being looked at where you're seeing these really huge growths in private markets, and that's being shared by a very small segment of the population, and everyone else is told, oh, you're too stupid to be here. But we let people be on juries, we let people vote. Like, I do think that like this paternalistic idea of regulators that, oh, we have to protect you from your own vices. Well, like you haven't really done a good job of that, just to be frank, in the crypto space or in the non-crypto space. And I think, you need to allow people to access to wealth growth and wealth generation because people aren't going to tolerate that. And I think there are ways of creating reasonable disclosures and making it a place where people can be informed, which I think would be a very positive role for regulation. I think the regulatory system we have now is making it impossible for anything to happen. There was an article about how no new banks are forming in the US because the capital requirements have just gotten so high. And all of this is just bad for the end consumer, good for the incumbents, good for the wealthy, good for the connected. Not to say there isn't insider trading and shenanigans and all sorts of self-dealing that happens in the crypto space. There is, and it's disgusting. And I was a very hardcore libertarian, saw the 2NX17 ICO boom and bust, became far less hardcore of a libertarian, then saw how the regulators kind of screwed the pooch and made everything worse. And now I'm slightly more libertarian again, but there is a role there. But we have to recognize that we can't keep the vast majority of the population that doesn't make $200,000 a year
And I
out of
think
wealth
to your
creation.
point, to your point is that retail investors are finding their way to crypto in any event. So we're not going to keep them out by, coming up with arbitrary thresholds for how much they own or what their salaries are or anything. But our panel sadly is coming to an end very soon. Sarah, Sandra, do you have? Okay.
Written code that's not audited out into the wild without any kind of second, third level evaluation, things that
Absolutely.
we're now talking about hundreds of millions of dollars of losses, not,
There's I think there's a solution to this. Some chains in the Cosmos ecosystem have permission contracts where you can't just put out smart contracts that haven't been audited and have been vetted. I think a good example of validators and infrastructure service providers that run these chains have kind of now begun to really internalize is that validators are supposed to be securing these chains and then, let's say, be the sort of decentralization set that it identifies them as these independent third parties that can sort of like promote that type of progressive decentralization from these centralized foundations that set them up. An example of that really kind of hit home for a lot of the validators was that in that same hack, when we were trying to send the $128 million to a shared smart contract that would be governed by the community, the core dev that pushed out that smart contract had actually done like a copy paste error. And then none of the validators actually checked that code and then just blindly pushed the code into a live production environment that the chain now kind of represented. And then we were all like, oh crap, like we messed up big time. And then whose responsibility was it? Was it the core dev's fault? Was it like written into law that the validators should have been checking the code that they were pushing out? I think maybe that does warrant those type of hack level checks and balances that can be permissioned in a sense that there are other people like auditors that kind of are on retainer to do that, right? And maybe that is quasi-regulation of the type of code that people are able to interact with. And it can still even be anonymous, right? There's a bunch of anonymous teams that work with auditors like Trailbits and stuff. So
yeah, I said that someone thought that there was Defi, DEFY, and now that I've gone after regulators and I've gone after the crypto industry, I'm now going to go after the crypto investors. On a technical level, there are definitely things that we can be doing better. The reality is, one of my favorite films is The Taking of Pelham 1, 2, 3. You can look at the plot, but there's a subway that gets hijacked, and the train controller just wants to get the trains moving again. And he says to the cops, he goes, "What'd they expect for a nickel, to live forever?" And, I'm not,
Respect for what?
for a nickel, to live forever. This is like a very New York thing, but it's a great film.
It's a great film. I just watched it.
The original one, not the garbage remake. Anyway, anyway, look, at the end of the day, people want to make money, and they want to make money really, really quickly, and they were able to get away with it. And so ultimately, you have investors that are going to go put money in. They're going to buy a bunch of tokens at a discount. Maybe they get equity in some sort of IP as well. All right, they want to pump that up as quickly as they can, dump their tokens, make their investment back in cash. All right, and it's unattractive for them to invest in core infrastructure equity plays. I've run an insurance company for 5 years that's equity backed. It's rough. Okay, now that the entire market's gone to hell in a handbasket, all of a sudden equity investments look pretty good. But people were really looking for very quick short-term profits. And I think I was very, very critical of DeFi for a long time. I'm still a little bit wary of it because what was happening was exactly what you said. People were pushing code, the code's not audited, they weren't following basic security practices, they were doing things that were relaxed, they didn't have good oversight, good governance. And to the credit of the industry, as I mentioned earlier, there's been a lot of evolution at this point, from an infrastructure perspective, from a coordination perspective, to stop these hacks and recover these assets. And at the end of the day, if someone steals $600 million and they get 1% of it back for discovering a major vulnerability, I'm not sure that's bad, and I'm not sure that's not basically like we're creating a new form of bug bounty. And we're working within the industry to kind of make these processes better and a little bit more efficient. I will say, from an investment side, and Bloomberg said an article about this, every good smart contract auditor has over a year waiting list. And no one wants to sit there and say, I'm putting everything on hold for a year because I can't get a security audit. And that is absolutely an issue. We are, the industry is going to have to build better tools, but it's still very fragmented. You have many different chains, many different languages, and eventually you're going to see, and these are things that we are pushing for and working on, standardized smart contracts, right? So everyone knows this smart contract works this way. It's at least been tested in the wild and has X number of value on it. And I think this is part of just the teething processes of this growing.
But to your point about the auditor, I mean, maybe that should be outsourced to the community and with bounties.
But
so
the
that
problem-
everybody,
The point is it should be done.
of course, you're right, it should be done.
As talking about industry standards, it should be an industry
Absolutely.
standard that basically the code has to be audited, tested, to make sure that what you expect from it is
I'll take a
we're gonna
contrarian
wrap
view.
up. We're gonna have to do
That's
the,
what
and
happens
Dan,
with high-frequency trading. Basically, they have to be tested, audited, and monitored to make sure that they're not having outrageous outcomes that are not correct. I mean, it's
Daniel?
nothing new.
Daniel, you have the last word.
Yeah, I think but one thing too, I think also realize is that it's not like a dead end of we need to audit these. The Ethereum Dow hack in 2016 was a really clear example of, right, you have like the power of exit in these cryptocurrencies. And the reality is that no matter what was like written in code and is immutable, these chains are only as good as in as much as people use them. So literally the community had lost so much money because the people who had put the money into the DAO had suffered this attack on it. They just created their own chain and then made a new one. And then they just literally rolled it back, rolled certain transactions back where they didn't lose their money. And so like, even in the case of like the 600 million, maybe that was like the Axie hack or yeah, Wormhole. So it's like, as much as like people think that, oh, we can't do anything because the hackers are all evil and they're running away and they're tornado cashing it, there still is the possibility that the community, if they're organized enough, like what happened in Juno, that these infrastructure service providers can literally just like say, okay, we're gonna create our own longer chain, or we're gonna literally put into code that the money leaves that wallet. And then if, for example, 99 out of 100 people do agree that 600 million should be returned and forcibly taken out of that person's wallet, then what is right or wrong maybe doesn't matter. It's what the majority agrees to. So I'm just saying that there's that potential that still is capable of recovering in light of these hacks, and maybe it is literally just a matter of organization or coordination to recover. So like immutability is, as much as it pains me to say, it's like it's a myth of
It's
blockchains.
relative.
Yeah, okay,
It's
yeah, it's relative.
So first of all, I want to say thank you to the panelists here today, Jay, Greg, Daniel. And I want to thank all of you for participating and
So
for
can I
joining
make a
us.
shout out for GBBC Digital Finance, because we do actually have a paper we
Always.
did a few months ago
Always.
that covers all of the issues and vulnerabilities and that we've been talking about today. And we actually have a working group that's working on this, and hopefully we'll work towards some sort
And
of
should they
industry
contact you
standard.
if they're
So
interested?
just encourage everybody, because basically the future can be in your hands.
Okay, that's it. Thank you.
Thank you.